Forex Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And we're going to be taking a look at understanding market behaviors. And we're going to start with our setups and our patterns that we actually trade on this channel. So without further ado, let's get started. Here's what happens when you get into a bad trade. So in this example here, we have basically what? A second leg forming here on the opening of the New York session, right? So you see potentially first leg and then a second leg, but the second leg obviously is outside of the box, right? So what happens here is what? This is all one big move here. Comes down, second leg, right? Inside of the box. Right here, look. We're about to get the crossover right here. So you think, okay, this is a possible good trade setup, right? During the New York session, we have 35 pips, okay, during London, and only 10 pips during the Asian session. So crap, we've only moved 45 pips, and this pair normally moves about 105. So you're telling me we got another like 45 pips left over, right? So that's what you're thinking. Okay, so here, let's try to set this up at what it would look like. Here, if you even go all the way up, right, we're looking at only 12 pips. We go to the bottom, and we see, damn, we could easily get 30 pips, 2-to-1, well over a 2-to-1 risk-to-reward ratio. So, what happens? So you get into the trade, starts to go against you. What's going on? What's happening? You see that? So now it's going against you. What do? Well, if you get into a trade, understand that you're not going to win them all, right? You're going to have losses, and that's okay. It's just part of the game, right? So you're going to have losses no matter what. So get used to it. So here's a quick and simple rule. If you're not in profit within 6 candles of you entering the trade, that's not the high of the day. That's not the low of the day. Okay? If you're saying that this is the high of the day here, there should be no reason for them to come back up at all, right? If you have first leg, second leg, and that's the high of the day, there's really no reason for them to come back and retest that point. Okay, so if you get into any of these type of trades like this, count 6 candles from your entry. So 1, 2, 3, 4, 5, 6. So just count literally 6 candles and just ask yourself a simple question. Are you in substantial profit or not? If the answer is no, close the trade and take your loss. If the answer is yes, you stay in the trade. Simple enough. And this is the rule, guys. This is a very simple rule for any trade setup that you take. Because remember, when you break it down and simplify everything, all you're doing is you're trying to trade the high of the day and the low of the day. That's it. So if you're right on picking the high of the day or the low of the day, then within 6 candles of taking the trade, you should be in substantial profit. Right? You should be up 15 pips. Easy. And 6 candles, right? So if you're not in substantial profit after 6 candles, that is not the high of the day. Point blank, very black and white. 6 candles in, you're not in profit, get out of the trade because that's not the high of the day and they're doing something else. Okay? So a very simple rule to keep you out of holding trades for any long period of time. It's that simple. All right. If you're not in substantial profit, just close the trade and take your loss. Because what you thought is the high of the day is not the high of the day. They got other plans. Okay. So in this case, look. So what you thought was the high of the day wasn't. Okay. So again, how to get out of bad trades that you get into. Very simple. 6 candles in. Are you in profit? Substantial profit, like 15 pips or more in profit. Yes or no? No? Okay, well, maybe you should take profit. Take profit. Call it a day. Take your small loss. It's not a big deal, right? You have a stop loss there, right? But if you have a stop loss, let's say of 15 pips, there's no reason for you to give them all 15 pips if you're not in profit after 6 candles. You know what I mean? Like, it just doesn't make sense. If you're down 10 pips, what the hell are you going to give them the next 5 for? If it's already been 6 candles. Take your 10 pip loss and move on. So another thing is, how can you stay in the trade as long as possible, right? So here's what you can do. Okay, if you're in a trend like this, let's say this W here. By the way, this is a trade right here, this W. You can clearly see there's your crossover. Second leg is inside of the box, right? So if you're in this trade, how can you ride this out as long as possible? That's, let's say, over 30 pips, right? So let's take this for an example. And the crossover happened down here. And let's say this is, about 30 pips or so right here, right? So first thing is, I think the easiest thing to go as long as possible is if the EMAs are in your favor, then use the EMAs. Okay? That's number 1. Number 2, if the EMAs are not in your favor, then one thing you could do is basically keep price going, right? Keep going until you see price close across the 5 EMA. So you see how price is basically riding the 5 EMA, 5 EMA, 5 EMA, and then boom, it closes below it. Okay. When you see that happening, that should be a good exit strategy for you. If you're trying to make this last longer than 30 pips, okay, because you want to try to get as much of it as possible, you can stay in it as long as price is above and doesn't close below the 5 EMA. So as soon as you see this and it closes below, just get out. Okay, I know that in this example here it goes up further, but this goes up further. Why? It's basically a continuation trade, right? But at this time, we don't think of this as a continuation trade. We think of this as an actual trade going back down, and that's perfectly fine. But what I'm saying is that if you want to try to stay in the trade as long as possible, that's past 30 pips, okay, the safest way to do it is just to keep riding it as long as it doesn't cross the 5. Once it crosses back down against the 5 and it closes like this, just take profit. All right, just take profit, guys. There's no reason at all to get all crazy with it, and risk anything more than you have to. It's just really not worth it. Like, we're not here for the short-term gain. We're here for the long-term gain. And if you want to do this consistently over an extended long period of time, over years, right, then you need to demonstrate discipline. Okay? And just knowing that, look, it's okay. Get out, and there's going to be another trade tomorrow or the next day after that. Like, don't ever think that this is like the one and only trade that you're going to have for the year or something like that, or the week or the day. You know what I mean? But if you want to try to follow it as long as possible, that's one way you could do it. All right, guys, so I hope that this video provided some value for you. I hope it gave you some insight into this particular setup. And so hopefully you'll become a better trader from it. Guys, if you like this type of content, please like and subscribe to the channel, and we will see you in the next video. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN Masterclass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys, and take care of yourselves.